Welcome to the Good Growth Podcast, brought to you by BGF, the most active equity investor in the UK and Ireland. This week, Jimmy is in Edinburgh with Michael Rolland, Managing Director of the Paint Shed, and Grahame Clarke, investor at BGF. Michael discusses his entry into the business in 2015, the decision to seek growth capital after 2 decades of family ownership, and reflects on how he pivoted his business during the pandemic to accelerate online growth.
Introduce yourselves, your name, company, and what you do.
Michael Rolland, the Paint Shed.
Grahame Clarke, BGF.
How long have you been at the Paint Shed for?
And this is my 8th year.
Yeah.
As full-time employee. I worked in the business just after school in the stores and throughout university during holidays.
Oh, right.
So there was a bit of time spent, not intentionally, but it was just something that in between university holidays. So yeah, spent quite a bit of time in some of the retail stores.
And was that when you were studying at Aberdeen?
Yeah.
Okay. So and then you rejoined as commercial director a few years into your career, right?
Yeah. So I spent actually the first 7-8 years in corporate recruitment, so a business called Page Group, and joined Paint Shed tail end, middle of 2016.
Okay.
Yeah.
So just before the world changed then, basically, and that kind of blew it. And talk to us about the scale of the business now.
Yeah. So we are...
And what it was when you joined in 2016, actually. Sure. Give us that.
Yeah, so I joined in 2016, we were 9 stores, and we had just reported in 2015 about turnover about 4.2 million. Yeah. Staff was about 35 people, predominantly in Edinburgh, and we had a couple of stores in the west, so Glasgow, and Stirlingshire, where the business is now headquartered. And where we are today, 2020, end of 23, we were 20 stores. And we just reported just shy of 21 million turnover, about 110 people.
Wow.
And, the journey to that is, as people sort of talk about turnover numbers, that's certainly the good bit of it, but the journey there is certainly been, we've had our ups and downs along the way.
Grahame, where do you enter the journey?
Into the journey, I joined BGF in kind of early 15 and met with, I think it was just before you joined the business, Michael and his father at that point for the first time, in terms of just understanding where the business was. We introduced through, I think it was Adolf Shaw's at the time who were kind of close contacts and legal counsel for the business. So then when Michael joined the business, the guys came back to have a kind of fuller conversation about investment and what that looked like. That was would have been one of 100 company meetings we would have done over the course of a year, but certainly one of the more kind of memorable ones, and that there was then a kind of cadence of once a year or twice a year of catching up with the guys and just understanding where they got to and how the business was progressing. And I think at that point, pleasingly, for people to go away and come back and say, well, we've done what we said we were going to do. We've opened X number of additional stores, and the business has progressed in terms of, its plans. Was really kind of pleasing and interesting to keep track of.
And so, give us the moment that BGF kind of invested and how the process goes for something like this.
So I think in certainly the journey with Michael and the Paint Shed was a longer journey than we would typically go on, but it was very much, a 5-year period of kind of relationship building, understanding the business, the potential behind the business, the motivations of the family, the shareholders Michael wanted to achieve, having come in and stepped into that kind of MD role. I think from the first meeting in early kind of mid-15 to doing the deal and the investment in the middle of a kind of COVID lockdown in June 2020, I think that period of kind of getting to know the guys and the guys getting to know BGF and me in terms of how it worked, albeit it took a long time. But I think that is representative of the upfront commitment from ourselves to understand what motivates people and how a deal might actually work in terms of once we all get on the right side of the table.
And was it one of the first deals, presumably, you did then in a sort of, well, I was going to say post-pandemic, not in post-pandemic, during a pandemic world?
It would have been, it would have been the first deal I personally was involved with in that period. I think we had a good understanding of the individuals. We had a good understanding of the plan. We knew, the potential of the business because we'd seen it and tracked the guys closely over nearly 5 years. So we knew that in spite of what was a kind of temporary holding pattern where shops were closed and what have you, that the business would rebound and come out the other side strongly.
And tell us about what Paint Shed does. I mean, it might seem obvious, but it'd be good to hear it in your words.
We are a paint specialist retailer. Whether that's online or in the store, we've got a solution to that decorating need. And what does that mean? It means the best way to think about it is if you are a tradesperson, you historically have shop for paint in a decorating centre, which typically is single brand, as in you can only purchase one particular brand in that particular decorating centre. Or if you're a retail customer like yourself, you might find yourself in a home base or B&Q. We sit right in the middle of that, catering to both needs, and hope that we give both customer bases the experience that they're looking for. So any of the frustrations that people have in terms of buying paint, which there are, we aim to overcome them in every transaction, whether online or in store.
And what are the frustrations that people have?
So if you're a retail person, it's probably no one's around to give you some help, some guidance. What product do you need? How much should you be spending? How much do you need? Also, you're probably, if you do get some help, it's probably from some grumpy person, and it's not the best experience. And normally, having to go out and go to some industrial estate somewhere, and particularly if you're a female customer base, it can sometimes it's not necessarily an inviting environment. So we're definitely the people that have been the force to try and overcome all that, and that's why one of the ways in which we've done that is through the online digital channel, which allows people to obviously transact online, but also research what they need before they actually come into the store, which of course in this day and age, that's all typical in any retail experience, but in the paint industry, it's actually quite new.
Yeah.
Or people don't do it very well.
Yeah.
And we definitely were the trendsetters when it came to that.
And tell us about the origin story behind Paint Shed.
Sure. So my family historically from painting contracting background, so actual decorators. So my grandfather and his father, so my father's grandfather, were decorators by trade, and ultimately they had a large contracting business once upon a time. And as my father was running that in Edinburgh latterly, they had a shop, a store on the back of the office. And that's where nowadays it's pretty common practice, but your white van man or tradesperson would come and purchase the materials if they're doing the odd job. And somewhere along the journey, as they moved offices, and the contracting business has got some great rewards, but it's also a difficult business, because ultimately you're doing all the work and then eventually someone might pay you.
Yeah.
Whereas I think Dad had a sort of light bulb moment where, at the end of the year, all the work and all the effort that was going into the contracting business was as a comparison to this wee store on the back of the office, was almost as profitable, if not more, than the weight of time going into the contracting business. So as they moved office, they had to move the store. They moved the store into a single unit and rebranded it the Paint Shed in the 90s. And from there, so Dad would have been sort of third generation from the family background in there. He had the foresight and vision to pick up a couple of retail outlets that were doing a similar thing.
Yeah.
So ultimately acquisitions or
Yeah.
purchases, and put them together ultimately in the same branding, and continued that into Stirling and into the West, and created something that was probably ahead of its time, because you had the competitors that remain in our industry are still kind of doing the same thing.
Yeah.
And that was definitely the foundation for when the customer behavior changed, kind of early 2000s, where people would come to a paint shop rather than a B&Q. It was there. And that definitely fueled what we ended up deciding to do together. And some of the expansion that we did in the last 7-8 years.
And talk to us about sort of moments that you've had when it comes to good growth, because obviously you've grown it steadily, but there has been periods, and I presume almost that pandemic period, when we were all at home looking at the wall thinking that could do with a lick of paint. How was that kind of experience? Is that why you took the money from BGF at that moment?
So we had said yes to the BGF investment pre-COVID.
Right. Okay.
So we were ultimately going through diligence, I suppose, at the time.
Okay.
And that's when, ultimately it happened. And that bit aside, the actual operational side of the business, it was a really difficult time. And, I look back on that, and I think we got 80% of it right. And there's a couple of things that I would probably do a wee bit differently, but you just didn't know.
Yeah.
Graham's right in the sense of course the stores would reopen and stuff like this, but at the time it was very difficult to, any gauge of time scales.
Yeah.
And what was happening was any paint business that didn't necessarily have whether it be infrastructure or the capabilities to do some of the online stuff that we ended up doing, basically just shut down for longer periods than actually when they necessarily needed to be closed in terms of the lockdown.
Yeah.
And what then transpired was there's a huge amount of demand out there. So trying to get a gauge of how much do we try to keep the business going as we wanted it to go, but also taking what demand was coming our way. And the demand far outstrips supply at the time. But we did a pretty good job in terms of channeling that.
And how did you kind of improve the sort of infrastructure when that growth's happening?
We were very fortunate that we replatformed our website, as in we rebuilt our website in 2019.
Right.
Onto a pretty modern platform. And that was a pretty tricky process at the time, but very grateful that we did it, because we're able to very quickly pivot between ultimately what products were available to purchase. So you had the UK population trying to buy paint,
Yeah.
And you couldn't service it all. So you had to make a decision of, right, ultimately what paint would you like them to purchase in each category. So wall paint, exterior paint, fence paint, which was a thing, and we did none of the,
spending more time in our garden.
And there was plenty of eBay sellers, selling a £10, fence paint for £100, and somehow, end up on the news, but we didn't do any of that. But what we did do was we calculated what we needed from a revenue perspective to keep the business going as we wanted it to, in terms of necessary amount of cash that we needed to generate on a weekly basis, to not have to go down the routes of everyone's furloughed, lots of grants. We could have easily done that.
Yeah.
But what we did was we actually calculated what we would need from a cash perspective. And we traded that through the website. And once we hit that, we actually stopped it. We stopped the transactions. We basically put a block on the payment service on the website. So we had calculated the amount of cash that we needed to do, and then we cut off the website every week, every day actually. And that actually saw us through 2-3 months before we felt comfortable that stores could open again, and ultimately some of the lockdown rules were granted. And at the same time, ultimately Grahame and I were talking about how we were doing that, and why we were doing that, and where that fitted into what we had spoken about when we wanted to do the deal with BGF.
And I think the bit as well that I don't think you can underplay or undercall is that at the time at which we entered that rather odd period of kind of lockdown and COVID, one of the things that we were looking or attracted to the business by was this, turning a bricks and mortar retail business with a small, online platform into where that growth was going to come from. I mean, the guys had a brilliant track record of opening, profitable stores across Scotland and latterly in the north of England. And the expectation was that would continue at a sensible pace as and when, the business felt comfortable doing that and sites came up. But secondly, in terms of adding on that kind of online piece and that route to market, and how big is that opportunity in paint, which actually at that point in time, pre-COVID, people would maybe typically nip down to the stores, or, there's certain behaviours in White Van Man, which wouldn't be to order it on the phone and click and collect. It would be to go to the store, and because they do it at 7 o'clock every morning, and pick up the paint. So there was a bit about the impact that would have on behaviours, and the extent to which, most importantly, the business and the operation, the back end of the business was set up to do that. And I think what you guys went through in that period was to really stress the ability to deliver that growth potential, and actually it put a strain on the operation and the back end of the business in terms of supply chain, being able to pick, pack and fulfill all of those orders across the wider UK. And I think we learned quite a lot about that as a business and as a board and as a group of shareholders, in terms of, if we want to go from, what was £1 million on online revenue to a much, much larger business at that point in time, there are areas that when you put that under pressure that need attention and need to then be upgrading around IT, around, how we fulfill that, where do we store it, what stock buys do we make? And I think the business did really progress in its thinking. And I know you guys, had to be really, really thoughtful about that when you come out of that period, because you'd seen almost through the wind, into that world of what happens when you go and treble or quadruple the size of a certain part of this business.
Completely. And talk us through your sort of decision-making process for, as a family business, taking on investment, right? Because there's so much kind of wrapped up with that.
Yeah. So, not a straightforward decision, definitely. And, but we were always very, as a starting point, I think, we always looked at it as, a trading business, and with Dad's experience in the contracting world, understanding that there's, as much as you can be a family business, a family business is still subject to, short-term ups and downs, and things can change very quickly. COVID was a great example of that. So, for us, we always treated it as a trading business, and what the business needed was going to be hopefully the right decision for the family as well. So it kind of started with that in mind. And, I think, and then with that thinking, you then go into the process of, we'd self-funded for quite some time. So, and we could continue to do that on a lower level in terms of growth. So it's, profitable growth was always the agenda that we were doing. So reinvesting, the profits back into the business. But that, again, only takes you so far. And we did have some significant avenues to look at that were going to require, beyond where our cash reserves were. So, when we went in to the way of thinking of, well, what are we looking for in investment? You go through the stages, you start with the traditional banks, understand if that's the right path for you or not. Certainly at the time, ultimately, low interest rates, very easy at the time to think, well, that's definitely the way forward. But, as time has now, seen that's not going to last forever. And it didn't last forever. And then you're looking into, well, what does that world of, let's call it private equity investment look like? And, certainly for me, I knew that if we were going to go down that route, we would need the people, but the actual partner, to be individuals that we liked as a family, so Dad and I. And in those times of ups and downs, the individuals were going to be supportive, and you're going to get on with them. I always remembered going through that and thinking, well, either want somebody in your life or not, and that's the starting point before you even get into the terms and conditions.
Yes.
And that was probably the starting piece for us, and how we ended up landing with Grahame and BGF guys. Well, as Graham's alluded, we'd spoken to them for quite some time, and then once I did the sort of rounds with two or three other individuals, and you get back to that conclusion.
Yeah.
Just like in my view, I'd come from a people background, so once you've met a bunch of people and understand what good and bad looks like, it wasn't a no-brainer, but it made it a lot easier to come back and go, right, well, these guys are the ones that are actually going to be on site.
And that's a really good way of thinking about investors. I've had this conversation a lot, but people that you want in your life, like it's a very kind of simple but clarifying way of putting it, I think. And tell us about the journey, Grahame, because you actually ended up having talked for longer than you've been investors in the company. So talk us through that.
Yeah, I think that, I mean, joking aside, I think that's a measure of, of kind of trying to find, that kind of a way forward that works for the business, that works for the ambition of the business, but most importantly, works for the people in the business, and in this example, the family. And that is, that takes some time, and it takes time for everybody to get comfortable with the business element of that, but more so the kind of personal element of that. And I think that was through an investment of time on both sides to really understand, not just where everybody was in this and everybody's contribution towards the journey and eventually, hopefully, and what was a successful outcome here, but also how it would work, at each point. And it's to build that trust and respect amongst each other. And then it was down to timing. And actually, there's no secret to the fact that every time the guys came back, they'd grown the business. They'd done exactly what they said they were going to do. They'd done it, to Michael's point, on their own capital, which was reinvested profits at that point in time. And there was always going to be a question of something needs to, and we were very open with them. What's the kind of driver then for us? Why are we relevant in this? Because you seem to be going along perfectly well, as you are at this point in time. As much as we want to be involved with you guys in the business, because we spent a lot of time talking, because we like the business, we like what you want to achieve and want to be part of it. The inflection point was almost the point at which he goes, we want to go faster, and we want to go towards an exit point, in the future. And the online piece, little did we know in terms of the COVID impact, positive impact in terms of COVID driving online demand was going to be, but it was recognised that online channel to market was going to be an important part of that, as well as the store plan that the guys had. And to achieve that in a shorter period of time drove the requirement or the appetite from, Michael team, the family, take on external investment. So there's a bit of the right place at the right time
Yeah.
after a long period of getting to know the guys. And there was other external interest in the business that we discussed openly. And, there's reasons why you kind of didn't go down that path at that time. But I do feel that, to try and construct a deal or get to a deal before that point, even when with the benefit of hindsight, it wouldn't have been right because the guys could easily obtain what they did. So it was that acceleration of the pace and the step into a slightly different channel to market that I think brought everybody together to say, I think there's a kind of meeting of the minds here.
Yeah, I'd agree with that. And I think, and that opened the door to, a rather, basic concept, but for us, it was going to be, a new step, which was being able to, properly further reinvest into some senior hires into the business, and in particular, our e-commerce function. So, on the back of COVID, we had invested a lot of time and money into believing that people would buy paint online.
Yeah.
But COVID accelerated that. And definitely it was a new world afterwards. So we needed, an individual and team around that individual to make sure that we'll be front and center for that. And certainly the BGF investment certainly made that happen.
How much of the business did BGF take in that first instance then?
So they purchased 19.5%.
That's definitely the right word, purchased.
It's a very sort of specific amount. Why that much?
Can
you remember?
Because we spent 5 years trying to get to the right number.
I think it was between, again, there was a certainly from a family shareholding total perspective, we wanted to be on the right side of 20, I think.
Right.
Yeah, I think there was kind of two elements to the deal. There's cash in for growth and a small amount of de-risk as well, which I think, was an important factor in the deal where the risk profile in the business is maybe changing because you're going into new channels to market and you're investing quicker. So I think that bit in terms of the equity purchase was to afford a small amount of, modest amount of cash off the table for the family to be able to almost kind of re-energize and go again without having, to Michael's point, all of kind of the family's kind of wealth, if you like, at that point in time, or the investment going back into the business. I think we see it in a number of scenarios where, done in the right way, that can kind of refocus and kind of allow kind of founders to almost kind of go again, in terms of that kind of risk reward piece, and you can apply the maths to it appropriately. That's where we ended up in those discussions, which felt the right balance. I mean, this remained kind of family business run by you guys, and yes, we had to think about succession and building a team to support a bigger business, which comes with that. But with that comes additional investment and risk, and I think that's one thing that the investment from us helped rebalance for you guys.
Yeah, no, absolutely. There was definitely a family de-risking part that would have, in terms of the partner, it was probably one of the few that understands that or understood that element. Whereas when people think of investment or traditional investment, sometimes it's all you're going again. You're kind of double down.
Yeah.
Whereas our situation, we were able to structure it in a way that would allow everyone to feel comfortable as a family and us to keep going forward. Because again, the challenges of repeating what we were doing, if you're constantly generating your own cash and then reinvesting it all the time, if for whatever reason you have a bad year or something happens in the market, that slows up quite quickly.
Yeah.
And with the pace that was going post-COVID, you really couldn't afford to, to be on the wrong side of it. And we saw that with some of our sort of smaller competitors. Only now, shock horror, lots of people have got websites all of a sudden.
Yeah.
But, they're 5-6 years way behind the curve.
And what did What else did BGF bring to the table as an investor,
I think,
apart from cash?
yeah, I think there's certainly from a talent, certainly from a talent pool perspective, we had to recruit quite fast to keep up with demand, and from a credibility point of view, I think that definitely helped from a recruitment perspective. And I think that's, I think quite aware of that.
Yeah.
Because it's, the recruitment market is, full of, high growth SMEs, but sometimes that's code for it's pretty busy and you're going to be doing a lot of things.
Yeah.
But with the sort of BGF element with it, I think there's an element of understanding in the professional services world of governance and structure to it, meaning we will try to put some governance and structure around however fast the business is going, rather than it's just all about the top line. So, I think that was helpful from a recruitment point of view.
But it's quite an interesting unintended consequence, though, of that sort of it being a bit of a kite mark type thing.
As in
terms of the recruitment, in terms of like, it just gives an impression of the scale of the business, right? Sometimes when you're looking at a business as a potential employee, it can sometimes be hard to kind of differentiate between the different options, right? Whereas actually you see, well, we were funded last year, etc. We've taken investment. It's almost like due diligence has been done for you.
Absolutely.
As a potential employee.
Absolutely. Right? And all those, and everyone's got them, stories of, things that haven't worked out in terms of new employment. I think that does, and it did sort of cover that off.
Yeah.
Because the investment wouldn't have happened without it.
Yeah.
So that was definitely a part. I think, and I think the other main thing for me would be, as of when people started to speak to us and the eventual acquisition last year, that process and helping guide us through that, which was unexpected, but helping us through that, to do that in a way where the day-to-day business is unaffected, even though there's a lot going on in the background during that process. I thought that was definitely a massive help, and something I think we would have struggled to do ourselves. In fact, we would have tried to do ourselves, which wouldn't have worked.
And so tell us about the next liquidity moment, Grahame. How does this kind of come about then 3 years on?
So I think it was interesting because I think whenever we set out initially, we spent a lot of time clearly speaking to the guys, and part of that, or fundamental part of that discussion was, where do you want to get to, guys? What does this look like at the end? And it was always, this is ideally, a kind of 3-year journey to go from here to here, and then an event to can happen. And I think the business did very, very well to deliver what it set out to do, as it always did even before our involvement. And I guess that creates opportunity and options for the business. And as we were continuing to keep exit and liquidity at the forefront of all of our discussions, from left field was the kind of inbound approach from somebody that we'd always had our eye on in terms of potential trade acquirer, somebody that you guys had a relationship with as a friendly competitor operating in different geographies. It came probably slightly sooner than we had fully anticipated. So, and it felt like we were kind of having to respond to that quite quickly, work out if that was real and that was going to get people to what they had in terms of was going to meet shareholder expectations. So there was a lot of work that kind of went in around that to do that. So, but the business had got to a point where it created that it was the right time to have that conversation. It never feels like you can be fully ready to do that, but we were certainly ready, to Michael's point, to entertain that discussion, because that's what the guys have been working hard to deliver for all this time. And I think that at that point in time, it was about responding appropriately and working out whether that was a route we wished to go down, and managing that in the right way. So, that discussion then lasted for, a number of months back and forwards, some DD, and worked out, well, if you like, in terms of the guys delivering the type of transaction, shape a deal that worked for ourselves, that worked for the family. And I think that it was, whilst it came earlier than we all would have envisaged. I think there was a bit about the kind of right place and the right time, because letting that pass us by would have led us down a different route. And I think from your perspective as well, I think it's the right, it's almost the kind of right home for the business, the right buyer for the business, in terms of a family business acquiring another family business with similar values and outlook, which I think was also incredibly important for everybody involved.
Yeah, I mean, I definitely agree with that. I mean, there was definitely a meeting of minds in terms of what we believed in the industry, and a lot of the things that we would want to have achieved as a business would have required significantly more risk, and I think we could, and I still think we can do that quicker, and obviously less riskier now, doing it as part of Brewers and part of the Brewers Group, and able for us to now do that. I think that the industry had got to a place where this was going to happen anyway.
Yeah,
there was a lot of consolidation going on in the market. So timing wise, again, we needed to pick our moment, which side were we going to be on.
Yeah.
And from a customer perspective, and for the people that work for the business, there's a huge amount of responsibility to make sure that you're on the right side of that. All the things that you want to try and do in terms of increase people's benefits and remuneration, and the customers getting, better deals, better and wider brand representation in the stores. All that stuff would be a lot easier to do if we were part of this group, and making sure that we were timing that correctly. Because if you weren't, then I think what will happen to the smaller players is they won't be able to do all that.
And what's your ambition now? Because you're relatively young man still. I say that because we're about the same age.
Yeah. No, absolutely. I mean, it's I was always incredibly passionate about the family heritage. It was never necessarily the plan, but there was a job to be done, and a plan to try and execute, and that was what we went about and delivered. I think next steps for me is to make sure that we continue to deliver on what I've just said, which is delivering for the customer base, the people that work for us. And I think if we can do that, it creates a different offering in the market that we operate. So it's, at the start, we talked about we're a paint specialist retailer. Our goal was always to be the kind of number one choice, overturn some of the barriers within the industry. As the group's now 220, soon to be 221, opening a store on the 11th of March in Kilmarnock. As we're soon to be 221 stores, nobody's going to get to that scale now.
Yeah.
And what will happen in the future is hopefully that infrastructure will become the go-to retailer of choice. And as the industry starts to morph towards retailing instead of your typical trade services, then who knows what comes out of that. I think for everyone that works in the business, including me.
That experience side of it. So just give us that scale of when you sort of joined the business, 2015, 2016. How many stores were you in?
We were 9. just turned 9. Yeah, we're just.
So it's sort of 20x growth in stores. What have you learned about opening new stores?
Yeah, so it's a great. So you see, there's a bit of an art to it.
Yeah.
In our industry, at least, and you see, I don't know how familiar. I'm
Where
sure.
are the 211 spread out? Give us a sort of geographical.
So everything from St Ives right, to Inverness, right? And I mean, I can only speak for the ones that we've obviously we manage ourselves, which is the 21. But obviously, I have a line of sight of everything now. But there's an art in our industry where it's not just a case. I mean, that sounds like it is a lot, but you have people like Screwfix Tool Station, which are owned by kind of Travis Perkins, Kingfisher, B&Q, and they're going for 500-600 in the United Kingdom each.
Yeah.
And they pretty much sell the same thing.
Yeah.
So, and that's just about footprint, but by the looks of things. I mean, some of those stores that they've opened, I can't believe that they're actually turning, profit there anytime soon. And one of the unique things that we were able to do is we were able to find sites and we were able to generate cash, sometimes within 12 months. And that's what I mean by there's a bit of an art to it, which is it's not just about the numbers, as in the number of stores. It's about finding the right location, the right person in particular to run that. And then that's more important than anything. We were one of the few businesses that had, we didn't do much, if any, brand marketing. So there wasn't, one of the things that we hadn't really dipped our toe into was large-scale brand marketing.
Yeah.
Definitely an avenue for the business now. And we relied heavily on word of mouth, the individual behind the counter, the location, position. So in terms of visibility.
That was the marketing strategy.
It was, yeah. And the brands that we stock within it. So the brands are ultimately doing the marketing for us.
Yeah.
And the individuals just guiding that customer to the right product at the right price for whatever the need is. So I still get inundated with, do you want to open a store here? Do you want to open a store here? And you could, but the game would have to be very different,
Yeah.
You still, if the game is still to turn a profit and add value to the location that you're serving in, then great. But in the meantime, the longer term vision will be that actually our digital arms can actually be able to use those 220 odd stores to do something.
Do you agree with the James Timpson ethos of it taking 3 to 5 years to sort of set up a store and get it profitable in terms of that awareness factor?
Yeah, I mean, we would model out a 4-year mature rate.
Yeah,
and all I would say, and that's kind of our safety net, which is, it may take up to 4 years to make that work, but sometimes it's a year. I think that's. So I think that's accurate, yeah.
Okay.
But also definitely,
But it's interesting how you've had two spurs to all this growth, right? It's the online pandemic surge, but as well, it's bricks and mortar as well.
Absolutely, and it's both. And I don't see when you end up talking about online and e-commerce, everyone sort of thinks that it's they care much about the retail arms, but absolutely not. It's both, and you need both. And we've been able to demonstrate that both they complement one another, because just like any of us do, we normally check something on a phone before we walk into a store, and it's no different in this industry.
Were you about to,
No, I was just going to add it's just about that track record thing in terms of, you did it 21 times. You were able to show us 9 very, very consistent, points on understanding what good looks like in terms of a new store, what you look for, and then having performance track in a very strong, consistent way. And that's, and on the way out, you're able to then do that, 19, 20 times over and show that. And I think, that's what the guys built the core business around. The online thing links it all together and was the kind of shiny new thing over there that is difficult and impossible to ignore. For you to present it back with, underpinned by a very, very profitable and successful, consistently successful store estate, with the online bit to come and that has grown in the background, I think was a really attractive proposition for the purchaser. And given the complementary geographies that you've described at headline level, us going from north to south and them going from south to north, it was only a matter of time, to go back to your question, before that came together and there was a kind of knock on the door, and that was due to what the guys had delivered on multiple fronts, really.
What does good growth mean to you?
I think it's controlled growth. I think for me, we experienced times where you were kind of egging the business on to do a bit more.
Mm-hmm.
We've experienced times when you're almost wanting to calm down a bit, and I think the bit in between that, for it to be sustainable and good, it needs to be good for the customers. It needs to be good for the people that are there, and I think it's not necessarily the sexy bit, but the bit underneath the bonnet of trying to keep up with or have the right infrastructure in place along the journey will make it good growth rather than sort of uncontrollable growth.
Yeah.
But that is consistent, and for us, we weren't perfect at it, but we certainly did a lot more than others. For example, we had re-platformed this website pre-COVID, but we're still at it. Like, record year last year, we've got to do certain things. Part of the reason we did what we did with the acquirer was, hopefully there's some learnings there and there's some infrastructure that we can share, and hopefully they will, that's the idea, is that, there'll be some infrastructure that we can buddy off with. But I think if it's not controllable and there's not, you can't, when you figure out what was working, you can't double down on that unless there's something, there's some solid foundation somewhere, because then eventually you lose the customers because the service is rubbish, and you lose the people because you're asking them to do too much, or it's not in a concise manner.
But when you add that together, Mike, good growth is sustainable growth. Sustainable growth is built on strong foundations. A large part of that foundations, yes, is infrastructure, but fundamentally it's people. And actually, your comment about store managers and them treating their individual stores as their own businesses, the comment about you and the family stewardship of a business that's now evolved, into its next phase of that good, strong, sustainable growth, what comes back to is, and what we look for as an investor is, sustainable growth built on strong foundations, backing good, strong, credible people with a clear plan. And I think when you wrap all that together, I think they're the kind of, for me, they're the core ingredients of, go back to your question, good quality growth.
One last subject that I want to ask you about is, you went off to study psychology at the University of Aberdeen, and there'll be a lot of family businesses that are listening to this and so on. And I was just curious about your sort of like, was it a classic 18, 19-year-old wanted to get away from sort of the family business, do their own thing, prove their name in the kind of Richard Walker of Iceland's kind of mentality, and then came back to the business a bit later when they sort of got a bit more kind of comfortable with it? So I'd love to get your thoughts on that. And then also, how did you guys build a relationship? What are the ways of doing this? You kind of mentioned drinks, dinner, golf earlier, etc. Like, I'd love to hear a bit about how you build that relationship outside the boardroom.
Like I said earlier, I mean, it was never the intention. So as much as there was a family business there, at the time, university and certainly post-university, it wasn't, I mean, as much as there was very much a trading business, it wasn't at a size where, there was external hires being done or anything like that. So the intention was definitely not to circle back. But as you did, as I went and spent these 8 years both Edinburgh, Glasgow, and then latterly up in Aberdeen, working for in the corporate recruitment world. One of the things that you learn was you met some fantastic businesses, you met some fantastic people. You also understood when people are moving jobs and looking for jobs, and in particular family businesses, when there's some challenges within that.
Yeah.
So both non-family members coming and going, so family businesses that are really successful and family businesses that aren't. And one of the reasons for that is, their ability to bring in talent and retain it, and allow ultimately those individuals to take some control and grow a business. So when the opportunity presented itself that the business actually was recruiting externally, and it was the right time, probably for me to put my hand up at the time, and therefore, given the background, I thought I could work with Dan to put the plan together and take it forward. And one of the things that was, Grahame just alluded to, we had individuals that were running stores, so like individual business units, which is very similar to the world that I'd come from. So it was about getting a team in individual store working well, and then replicating that across the estate, and then trying to put some infrastructure around it from an external resource point of view to support it. And that's obviously the idea. The difficulty is obviously trying to put it together and execute it. So, as they say, kind of life happens when you're making plans, and that wasn't necessarily the plan. But delighted that the opportunity arose back then, and delighted with the journey that we've taken it on, and delighted that we have been able to transition the business into a place where there's some great new owners. I'm very much there to make sure that we continue the good work that we've done. And yeah, who knows what the next step will be now.
And building relationships outside the boardroom.
You've given Michael an opportunity to boast about his golf records when we've played against each other. So yeah, built fundamentally out with the boardroom, important decisions and structural debate in the boardroom. But I think a lot of it, and a lot of investing in family businesses and building relationships, is done out with that. I think we always, whilst we didn't always agree at every single point, I think we've always had a good relationship away from that, and been able to turn away from that, whether it's through golf or a glass of wine or otherwise, and took the time to to regularly catch up, the two of us, and continue that, whether it's an extension of what we discussed in the boardroom or just more generally catch up. So, and I think that was important, especially when the big decisions come around, because I think it's about that trust and understanding where everybody is in that, and being able to kind of lend support and words of encouragement where informally as well as formally.
Yeah. What were sort of some of the disagreements, like moments about?
I think what you find is there's so much, like any business owner, any shareholder, any business, but in particular family businesses, it's such heightened emotion. It's so personal.
Yeah.
That Grahame mentioned trust there, and I think absolutely, but it's almost like blind trust, since you don't know what the outcome is on a particular decision. You're having to really trust that the expertise and the guidance around the table is the right decision. And I think the disagreements would be, at the time, you think, okay, we think that's right. We probably would make a different decision if it was just the two of us, but I think we're doing the right thing. And then you look back on it now and you go, yeah, that was the right thing.
Right.
And I think it's down to kind of, disagreement is maybe a strong word, but it's down to kind of challenge in a broader perspective. And that's what we're there to offer. We're not, we've backed the guys, they're more than capable. You've seen that in terms of some of the headlines around the numbers and the progress that were made without us. But, we backed them and absolutely to run this business to go and more than double it in size in a in a kind of certain space of time. I think, but it's absolutely our job and our role to kind of challenge those decisions and add a broader perspective. And I think that's where building the trust over the time before the deal, and even socially in that, that's received in the right way. And then we can have a more, a more kind of involved, higher quality debate without, there being agendas or anything other, or being misunderstood or taken in the wrong way. And I do think that genuinely we clearly collectively got the big decisions right. I think for you guys, hopefully that's also a support mechanism to say we're not alone in making these decisions. We've got people to lean on and challenge as well. So it's definitely a two-way. That is a two-way street, but you can only access that two-way street if you build the trust in the middle of all that, both before you're sit on the right side of the table and out with the boardroom as well. And that's a commitment of everybody's time on their own time as well. And I think that's where, I think that did work well here. And as a consequence, we got the big decisions right, which I think did contribute towards getting to, to the right answer in the end.
All right. Great. Where's the best bar to have a glass of wine in Edinburgh?
Right there.
In 5 minutes. That was great. Thank you so much for coming on and sharing your story. It's so interesting. And, family businesses don't perhaps sometimes get the coverage and that they deserve kind of in the national press and so on. And that's partly what we want to do with this podcast, is put a spotlight on those stories. So it's amazing to kind of hear that journey and how a family business can really change and turbocharge is, I think, a really unique insight. So thank you.
Thanks, Jimmy.
Cheers.